Hi, this is Matt Wiggins with Pattern, and today I'm going to show you something I've used with over 5,000 doctors through the years to help take disability insurance from something that's fairly complicated and complex and make it very simple, make it very easy to understand. And the whole reason we want to do this is we know three main things about doctors. Number one, you need disability insurance. You need something that protects your income. Number two, we know you don't learn a lot about these things in training or any other time, so you got to learn it somewhere. And number three, we also know that there's a lot of misinformation out there. Some of it's intentional from other insurance companies trying to sell you their products that aren't good for you. And some of it's unintentional things that you just happen upon and people just don't have the right information for you. And so what you can see here is we've developed a report that we use with doctors, thousands of them, and the feedback really is that it made it very simple. And so I hope that's what it does for you. We'll see. First thing you'll notice is there are 6 options here: Emeritus, Guardian, Mass Mutual, Ohio National, Principal, and Standard. Now, the reason there are 6 companies is because out of all 28 different options that you can potentially get insurance from, these are the only 6 that have something called true own occupation coverage. As a doctor, this is super important because what that means is if you get disabled to where you can't do your specific duties or your procedures, then they're going to pay you the full benefit just for not being able to do that. And then you're free to kind of do anything else that you can do, and they're not going to penalize you. In other words, if you're a doctor and you're making $300,000 a year and you get disabled, they're going to pay you the full benefit, even if you could go teach and make $80,000 a year or work at a library and make $40,000 a year. You're not going to be penalized just by being able to go do something else after a disability. You're going to be compensated for not being able to do your specific occupation, your specific specialty. So that's really what you want as a doctor. And these are the only 6 that do it. So if you've been approached by any other companies, just know that it's not what you're hoping for. It's not the right kind of coverage. So as we make our way down through this report, we'll start off with the product name. Basically, this is just the name of the policy. There's nothing important about it. I really wouldn't worry about this much at all. But when you get to benefit amount, all of a sudden, this is a number that's very important. When you're going to buy a policy, the benefit amount is how much coverage you're going to have on your income on a monthly basis. You can see here we've arbitrarily used $7,500. And what that means is if you got one of these policies and you became disabled, they would start paying you $7,500 per month, and it's tax-free. And so you really are going to receive the benefit amount that you're paying for. And the benefit maximum, policy maximum benefit next, what that's telling you is you can start with a certain amount of benefit, but you can increase these policies over time. And as you increase them, you're going to hit the maximums maybe at some point in time. And they're different for different companies. You can see Emeritus, the most coverage you can increase up to is $15,000 a month. Most of the other companies are $17,000 a month. And then Guardian is at the top. You can go up to $20,000 a month with them. So the main thing to know there is, your income typically goes up over time. Your health typically goes the opposite direction, which is a bad thing. But you'll be given the right to increase your policy in the future if you just start off with with some amount of benefit. And so here we'd start off with $7,500 from one of these companies, and then we'd have the right to increase it in the future as our income increases over time. Next, what you'll see there's an elimination period and a benefit period. The elimination period is just, it sounds fancy, but it's just how long you have to wait after a disability before they start paying you the benefit. So again, using the $7,500 a month, if you became disabled, 3 months after that disability, they would start paying you $7,500 per month. And then if the disability persisted and continued on, they would pay that all the way until you turn 65 years old. Now, these things are variable, but I'd say roughly 90+% of the doctors that we work with get these exact 90-day elimination period to age 65. So very normal to have those parameters on your policy. The next thing you'll see is that it's non-cancelable. Just know that means that you can cancel anytime you want, but it's meant to reassure you the insurance company can't cancel the policy on you. So it can't be canceled. It can't be changed or modified. You're in control of it, but nobody else is. And that brings us really to our 3 ancillary benefits. These are probably the hardest things to understand, but I'll try to kind of take that edge off and make them simple. First of all, you have residual benefit. And residual, when you see residual, just think of the word partial. And so these companies, of course, if you can't do your duties fully, they're going to pay you the full benefit. But there are situations like illnesses or cardiac events where you're just more easily fatigued, where maybe you can still do your duties or procedures, but just not full time. And so in that case, these companies do want to help you. They want to pay you a partial benefit. And so let's say that you've lost 40% of your income from working part-time. All these companies are going to pay you 40% of their benefit, again, just to help you in that situation to recoup your partially lost income. So it's not just all or nothing. They can pay you partial benefits. The only caveat is you can see some of them have a 15% threshold, some of them a 20%. All that means is, if you have a 10% loss of income, no one's going to pay you anything. But once you get past their threshold, that's when they start paying you those partial benefits. So in theory, it's better to have the 15% threshold. Supposedly, you can lose less income and they'll start paying you partial benefits. However, we've never seen a case where someone came to us with a 17% claim, loss of income or something where this would have made a difference. So, just know there's a difference there, but just don't make too much out of it. Next, what you'll see is catastrophic benefit. That's just saying if you're ever disabled catastrophically. Some companies will say you can't perform 2 ADLs or more. Some of them will say you have an irrecoverable loss of sight or hearing or things like that. So be sure that you know what the definition is with the company that you end up wanting to go with. But if you're ever disabled catastrophically, according to their definitions, then these companies are going to add more money. They're going to give you more money than the original benefit. And there's certain calculations that you'll have to learn from each company. But the main thing to know is they want to give you more money in case you're catastrophically disabled because you'll have increased expenses. So increased expenses, increased benefit helps you to take care of those. So it's a great benefit to have on your policies. And the last one is the COLA rider. It stands for cost of living adjustment. And really what this is meant to do is, if you're a younger physician, God forbid, but you could be disabled for a really long time and have to live off this for income. And if that happened and inflation's happening around you and prices are rising in the economy around you, you'd be able to buy less and less. And so these companies want to give you a raise every year that you're disabled after the first one to help mitigate some of those inflationary effects. So just look at it as a raise every year to help you with inflation. Some of them, like Emeritus, give you 3% every single year. And others that will give you from 0 to 3% depending on inflation. That's that 3% compound that you can see. And then you've got Ohio National, which actually has probably the best one. It starts at 2%. So every year you're guaranteed 2% raises. But if inflation goes up above 3%, they're the only ones out of this group that their base level COLA, cost of living adjustment, will go all the way up to 6%. So they could technically give you more. Now, again, inflation adjustments, not a reason to buy a policy, but it is a good thing to know that there's some differences there, and some of them are better than others. And all things being equal, may be a thing to help you make a decision on. The last few things, as we get down to these last few things, you'll see mental limitation. Just know that all of these policies want to help you if you ever have a psychiatric or a mental health disability. But most of them are only going to give you up to 2 years of payments. And there's just a ton of fraud in this area for insurance companies. So they're trying to limit their liability there. So you see where it says 24 months, it just means that they're going to give you up to 2 years of payments. But after that, they're going to stop. And they're hoping that you'll get back to work within those 2 years. There are companies like Standard that provide full coverage for this. And so if this is a hot button issue for you and you really don't like that limited coverage, just know that you can go with companies like Standard who have full coverage on that, and it'll pay till age 65, just like every other disability. And finally, before price, we get the Comdex score. This is just one of our industry's best, in our estimation, best ways of understanding financial strength and stability in these companies. And it really is something you should pay attention to, because historically, what we've seen is the higher the Comdex score, the more likely they are to pay your claim and just make it super easy. The lower the Comdex score, sometimes they fight you on it a little bit more, make it a little more difficult to get a claim paid. Now, these are all top quartile companies, so very, very good at what they do. But it does hold true. We have seen the top decile companies, Principal, Ohio National, Mass Mutual, and Guardian, really pay out claims a lot easier. Standard and Emeritus, we've seen them have a little bit more issues with that, just make it a little bit more problematic. So again, if the price is a lot cheaper for any of those companies, by any means, they're great companies. They're going to pay your claim more than likely, and I would definitely be willing to take them. But if everything's pretty close to equal, especially in price, then one of those top decile companies might be preferred for those reasons. So the last thing we'll look at over here is price. Just know that we've got two features here, and really you should look at it these two ways. The premium amount, or the you can see there 512. We just kind of generically made it the same across the board. That's what you're paying per month for your policy. And so it's obviously very important to think about cash flow wise and what you're spending on a monthly basis. The price per 100 kind of tells you, if benefit amounts are different, for our purposes, they are the same, $7,500 a month. But if you get quotes back based on your income, they could vary. And so the price per 100 tells you what you're paying for every $100 of benefit. Sometimes it can be a better apples to apples way of actually comparing the price. And so this was just a good report. We actually do these reports for individuals. And if you're interested, if this made sense to you and we broke it down and made it more simple for you, we can actually get you your unique, your individualized quotes so these prices aren't the same. And of course, if you're in training, you have discounts that are, in some cases, almost up to half off of the normal rates for an attending. So by all means, you want to look at those discounts and find out what you have available. If you'd like to see an individualized report where we take this and customize it to you specifically for your specialty, your age, the discounts that are available to you, just fill out the form below. It's going to give us all the information that we need. And we'll go get quotes from all these companies, generate your individualized report, and then you'll have a chance to kind of learn about this and what it means for you specifically, and ultimately make a really great decision, because at the end of the day, that's what we're trying to help you to do. We want you to make a great decision, get the best option at the best discounted rate. And if we can make it simple and help you to understand it, make a good decision, that's what we're here to help you to do. So hope this was helpful. Give us any feedback, email us, let us know if it was helpful. And obviously, like I said, fill out the form below if you'd like to look at your individualized and customized options and discounted prices. Thanks a lot.